So we move into activity question 2, opening year loss. So this is obviously within chapter 8, and I've chosen the opening year loss relief rules because students tend to sometimes have problems with this, and I think I know why. I'll explain in a moment. So basically, this is one option, for a trader in this position. So what's the requirement? So we see we have to, in A, identify the trading assessments and tax loss for the tax years 21-22 through to 23-24. So several years to address there. Sounds like we're going to have a set of columns, highly likely. Outside of that, what they ask us within B is the net income. So calculate the net income from 2021 through to 22-23. So in effect, what they're doing is that they're prompting, aren't they? That this question goes back several years. Now, if we didn't know, if we didn't have the heading opening year loss relief, then that would be the sort of the gimme, as it were. That would give us a feel for, well, we're going to be going backwards. It's highly likely that this particular scenario relates to someone who is starting in business. More of that in a moment. So 2 parts. Let's look at the scenario now. Now, as expected, this individual, Mr. Knight, has started a business, okay? April 21, and they give us the results. Now, note that in relation to loss reliefs for individuals, the same thing works in terms of basis periods and base of assessment. In other words, it's not going to be complicated, okay? To calculate or to relate, as it were, the accounting area to the tax years is not going to be difficult. It's really the loss elements that are going to be a little bit tricky. Okay, so whether or not it's a loss or a profit, this change that we have in FA23 makes things easier for us. So he's starting, there's his results. Looks like the 3rd year is where the loss is. If we move down the page, we'll see that he was in salaried employment prior to the commencing the business. Now, that's also a prompt, isn't it? That it's highly likely that we're going to be taking this loss and going backwards. They give us the details, obviously, in relation to the salary income for each of the years. And indeed, addition to that, he has property income relating to all years. So we'd be looking to set up computations for these years and then really bring the loss back under the special opening year rules. Okay, so in terms of our first port of call, what we've got to do is calculate the trading income assessments. Now, as mentioned, that's not overly difficult because of the changes. Really what we've got to do is say, okay, let's relate a tax year to an accounting year. And you'll see in the answer here when we come to it, not complicated at all. In fact, this is laid out exactly as the question lays it out, with all the year ends being easily manageable. This is what the examiner is going to do in your exam. Going to make them manageable. They're going to be either 31st of March or the 5th of April. So we're just looking for the accounting year ending in the tax year. So for example, this first one here, 21-22, 31st of March 2022, that definitely ends in that tax year. Therefore, those two are matched. Second one, the same. And indeed, the third one, the same. So you can see in terms of the layout of the figures here, it's really exactly as it was in the question. Okay? So this area is not complicated. So in essence, we actually have the trading income assessments for each of the 3 years pretty easily. With obviously the final year being the year of the loss. Okay, so not much work to do there at all. The work starts in the next bit. So let's just remind ourselves of the requirement. So what they're wanting us to do, is to provide the net income. Now that net income must be total income from several forms, employment, property, less any loss that's related back. Now, we'll remember in relation to the opening year loss rules, remember this is only one option, it doesn't have to do this, but they've said, assuming earliest relief for the loss. What does that mean? Well, it means that they want you, rather than to carry it forward, they want you to carry it back. So there's the prompt, and we'll see in the setup of the answer Let me slow this down a little bit to make sure you understand what I'm talking about. You know, it says the loss, yeah, 28,480 in 2023-24 will be set against the total income of the previous tax years. What was the total income of the previous tax years? Note with the earliest year first. Well, let's set up, as I mentioned, the headings or the columns, if you will, and let's firstly just simply populate, yeah, the income tax computations with the income that they provided us with. So they've simply said, okay, employment income 2021, they've said property income for each of the years, and indeed outside of that, clearly we have the 22 and 23 year with trading income. So this is our first port of call to get the total income, okay? Now, we know that we're bringing the loss back into these years with the earliest year first. Note that with the special opening year relief, we go to the earliest year first. So that means we bring the loss as much as we can, 15 grand's worth, back to 2021. Done. Absolutely cleared out. Now, obviously note that the PA has been lost there. That's a point to note. They don't actually mention it in the answer, but the PA has been lost. Outside of that, let's move forward then. Again, we can take all of this, and we'll see in the loss memorandum just down below, we've still got plenty of loss to utilize. And then in the final year, basically it's the balance. So if I show you that, might be a little bit easier to look at here. The loss memorandum. Just very quickly, what do we mean by loss memorandum? Well, what we mean is, and this would be required in an answer, what we mean is show how the loss is used across the relevant years, whether or not it's opening years, as is the case in this question, or indeed any other claim, okay? So you start with the loss at the top, and you just show how it's used. So we went back as far as we could first, yeah, and relieved all of the income that year. Then we went forward a year, relieved all of the income, and then we used the balance for 22-23. So this is a very, very good loss relief provision for individuals that start in business and in any of the first 3 years, note, of their business, incur a loss. So the loss could have been in any of these years. It just happened it was in the third one, could have been the first one, second one. So you can relate it back to the 3 years prior, okay? Prior to the business starting, okay? So in effect, there we have it. We have, in effect, fully utilized the loss. There's no loss left. We have net income in the penultimate year. We're basically done. So basically, in summary, and in effect, we're saying that we have this loss, yeah, it's in the opening years, we're going to use the provisions, and we're going to relate it back earliest year first. For 3 years, use it all up, okay? So, hope that made sense, and please do join me for the next activity question. Many thanks.